Good evening, everyone. Thank you so much for coming for today's workshop. So we're excited to have our first fully physical NUS Fintech Month event with a series of workshops, panel discussions, and hackathon. So today we are happy to have Yi Liang here. He's the non-executive board director and regional head of compliance from PayerMax. He has prior experience in anti-money laundering, corporate governance, and data privacy. And now I pass over the time to him to share with us more on navigating the payments space in the digital age and careers in fintech startups. So without further ado, here.
All right, thanks everyone for coming. My name is Yi Liang. Right, today I'll be speaking on two items. First of all, first item being navigating the payments space, which focuses on the development of payments throughout the years and how payment is done as a business. And secondly, careers in fintech startups. Or at least that's how I envisioned it at the beginning. After seeing the promo piece on LinkedIn, it seems like the focus has shifted to navigating payments in relation to careers in startups. And I guess here's the difference in perspective. I guess in hindsight, I should have known that the priorities of undergrads such as yourselves lie in employment and careers rather than the details on payment. But I think the context will be useful nonetheless. I think, but I'll also try to elaborate a bit more on the careers piece in the fintech space, open to fresh graduates, which will be a bit more of an open-ended piece. I also welcome any questions after the session. Speaking of context, let's do a brief introduction from of where I come from. PayerMax is a global payments company headquartered in Singapore. Myself, I assist with setting up the local entity in Singapore as well as regionally around the APAC region. We just got our major payment institution license granted from the MAS recently, so you'll see a bit more of local activity from us as the year goes on top of all the other cross-border work that we already are doing. Outside of this, I also participate in some fintech initiatives such as this one. Like most of yourselves, I was also once an undergraduate from the National University of Singapore, so NUS is my alma mater. I also understand this is your first day of school, right? So welcome back to the semester and thanks for attending. I'm honored to be able to speak with everyone today. First of all, I'll go through the agenda here so you know what you're in for. A quick primer on what payments represents, what is payments, what we mean when we use the term payments to describe an industry or a job. Next, also a look back on the evolution of payments through the ages. And we'll end it off with a piece with the future of fintech, as well as the role of compliance in payments, which will then segue into the introduction on fintech careers. Then after that, we will end this off with a conversation, a more casual kind of conversation on choosing fintech as a career. Why would you want to be in a fintech and what to expect when you join a fintech startup company? So what do you think when someone mentions the concept of payments to you? One could say that it is transactional in nature. Some would say that it is the act of making and receiving payments. Others would take the position that payments is the entire end-to-end flow, signifying the purchase of a product or provision of a service. I would say that all these definitions are valid. There would also be some additional concepts that come along with payments. For example, what is the mode of payment? What currency are we looking at? Fiat or crypto? Is it debit or credit kind of payment, which we refer to as prepaid or postpaid? Additional questions, who processes that payment for you? How many layers of processing are there? If it is a card scheme that you're dealing with, are you dealing with the master acquirer or the sub-acquirer or just merely a payment agent? So there are many layers that come along with the concept of payment, but the core of it is really looking at how we enable payments. That would be the wider umbrella when we refer to the payments industry, and that's where you look for jobs, which means that it covers other functions which are incidental to payments, which were already available before, such as on and off-prem hardware, servers, on cloud, and the evolution of the point of sale devices. So all of these are incidental areas that will arise from the conduct of payment as a business. And of course, even deeper inception when we talk about the value-added services that accompany payments, which I think all of you are learning right now. For example, data analytics, artificial intelligence, machine learning, natural language processing or NLP. All of these are industries that are linked to the neural network that we know as payments. And that's why it's become, it's become at the forefront of industries these days, because it is an amalgamation of all the other tech buzzwords into its new shiny form as payments. Unfortunately, I will not be diving deep into all of these as a concept, not deep enough, as this is not a CS 1000 or a BSP 1000 module. No credits for this talk, but it's good, I think, to establish the foundation of what I'm about to speak about in terms of payments. Next. We move on to a brief history of payments. These are just small tidbits for you, as we are way far into the future right now, with lots of room to grow. But yes, the first form of payments or transactional behavior in humans originated from barter trade, which was a concept of trading without a precise equivalent value. This was because the level of communication between societies was not at that level to facilitate a commonly agreed payment standard, for example, or agreed reference point for the worth of the goods being bartered. Although these were the very early signs of supply and demand, the element of relativity for goods was too high, and there was no stability and permanence. So as humans began to settle down, societies began to form villages and towns, they developed a mode of payments using precious metals. So the early form of precious metals is very different from what you see today. It did not have a very precise form of measurement, which means that you could get, for example, non-standardized metal with varying degrees of weight and purity. Since the worth of a precious metal, as we know today, is determined by its composites and purity, it was obviously not a standard that was made to last with this kind of infrastructure. However, along with it also evolved the concept of scarcity. The metals were highly valued because they were scarce or difficult to obtain. In between, there were other personal promissory notes that signified a promise to pay for an item, which held limited use and were traded around a limited market without means for centralization. So it was conceivable that you will end up with a bunch of notes, which are without being able to find the original promisor or the promisor that passed away to deal with the issue of succession, or notes just simply came with it with conditions for redemption, again, non-standardized. Therefore, the promissory note later evolved into a negotiable form of banknotes, and bills of exchange evolved into checks, issued and honored by banks or financial institutions that we know today. This is what we commonly refer to as centralization of currency between banking institutions and financial institutions. Of course, we look today at the 20th century and beyond, payments have now moved to its digital form, which I will later touch on in a more in-depth manner. One notable point, if you can see, after the centralization movement that you have seen in the development of payments all this while, which was often viewed as the most efficient way of carrying out payments, there is now a swing back to decentralization that we know as DeFi, as users start to lose faith in institutions. But I think that is a more in-depth discussion for another day. Next. The evolution to digital payment is probably something that is more pertinent to our everyday lives. There's hardly a day that goes by without you as a consumer conducting a digital payment. And even if anecdotally you don't perform a digital payment, you're probably in the minority. And on top of that, also corporates engage in digital payment virtually almost every second. It's a very lucrative industry. The earlier forms of digital payment, depending on how you define it, was driven by banks or financial institutions through the issuance of a credit card, which was registered on the network of banks and honored by them. Thereafter, you could see also a shift in the evolution of the form factor for payments. So methods for alternative payment methods started to evolve, especially the most popular one would be mobile payments, which everybody tends, has used today, I'm sure, among you. I also don't think you'd be surprised if I told you that the smartphone penetration rate for some of the Southeast Asian countries today, Singapore, we have a penetration rate of 87%, Malaysia, 83%, Thailand at 75%. These are all great markets to tap on for digital payments, even for countries with lower penetration rate. That really only means that there's an untapped market that we have yet to really serve. So that is also in itself opportunity for payments companies. There was also rapid growth of payments along with tech, as you are well aware, during the pandemic season. And this was accompanied by a range of both technical and regulatory innovations to keep the framework robust and healthy. In turn, this improved customer experience, drove revenue, and also reduced operational costs for companies. And companies started to talk about them. Then there was more conversation about focusing on a seamless experience for customers, which is where your UI, UX started to develop. So what did this mean for emerging markets? Yes, the recent state of COVID catalyzed the adoption of digital payments. People were essentially changing and adapting their behavior to accept the new norm. So e-commerce and contactless payments. E-commerce and contactless payments for safety and health of consumers, use of tech devices to scan QR codes or tap became much more prevalent. The fastest growth in digital payments occurred in Southeast Asia and Africa, making these two regions a hotbed for startups and unicorns and what have you. You see a lot of seed funding. All of a sudden, you see all the big names popping up with more seed funding than ever. Unicorns are also starting to emerge because of the development of digital payments in emerging markets. So the increased number of players in the market will indubitably lead to more friendly, hopefully, competition between traditional forms of payment like FIs and banks and the ever-burgeoning fintech, which is always breaking new ground. At present, you can see that traditional are strongholds in most countries, but however, you can also see the growth and the shift with some outliers in countries where the non-banks actually hold a bigger market share for front-end payment processing. So these are some stats for digital payment. I listed them from McKinsey. So between 2018 and 2021, there was a huge annual growth rate of 13% in non-cash retail payment transactions. This is across the world. However, if we talk about the emerging markets, there's actually a 25% annual growth rate in payments. That is really large in comparison. So in most emerging markets, this trend of growth is expected to continue for the next 5 years. The four major trends that were observed are that these are pandemic-induced customer behavior, a shift basically in customer behavior, growth in e-commerce, government stimuli for cashless payment, as well as an increase in investors' appetite for payment companies and its related industries. Nonetheless, however, despite all this growth, cash remains top in some markets, such as in Southeast Asia on average. So what does this mean again? This again means that there's room to grow and expand in this region, and I don't think we are nearly even at peak when it comes to payments in this region. How then are banks feeling or responding to the growth of fintech and payments in emerging markets? I think that they are actually caught between a rock and a hard place. They have to move somehow to adapt to the new norm. There is an existing dominant position that the banks fill in the financial sector, but they are also dealing with issues like diseconomies of scale, saturation, and also a bear market that's been plaguing us for over 2.5 years now. So, the banks have to evolve as well to keep up the times. The response to the rise of digital payments is usually what I notice as collaborative. You see a lot of banks partnering with budding fintechs to release a product together. So, for example, in some of the collaborations, the product development cycle, the inception, they are jointly handled by the fintech or driven by the fintech, but funded by the banks. However, for the banks, it also presents itself as collaboration risk because the banks also have to be, with incubator projects, the bank also has to be prepared to write off bad ventures, as well as, for example, investing in Web3 projects that are ahead of its time without the proper infrastructure. There are also incubator projects by banks where they acquire or grow their own fintechs. So that affords the bank with a bit more control over where they bring the direction of the fintechs that they're incubating and influence, of course, the deliverables so that they are useful for the bank. So that's also an approach that banks are also dealing with right now. Also, in some not so positive responses in some countries where the banks are allowed to do so, they have been taking a more defensive approach. So they use their funds to lobby politically so that the government will pass anti-fintech laws, right? This is not an endorsement, right? It could swing in any way, but it's up to you to decide whether you think that approach is good for society or not. So what are the non-banks doing, right? The non-banks, typically, they will take advantage and they will leverage on the lack of strong infrastructures in their home country to develop their own payment methods. So the most popular payment method, I would say, is actually the e-wallet. You've definitely heard of it. You've seen many e-wallets pop up, both in Singapore and in other places around the region as well. You've heard of it. You've traveled to these countries, you know that they use it. The wallet penetration rate typically tends to have an inverse relation to the proportion of bank persons. Why? Because digital wallets are faster to onboard, easier to bank, and have an overall higher degree of accessibility to the common person. It also doesn't require such in-depth credit bureau checks to ensure that you are competent to hold a bank account or to draw or to have an overdraft, right? The wallets are a bit more lenient in that sense. They don't do a thorough credit check for you. So you see much more people actually owning wallets first as their first form of participation into the financial society, as opposed to banks from before. So what do we see from this? Where there is a gap in financial inclusion, fintechs will then rush in to fill that gap, probably with seed money incentives and promises of seamless customer journey. And that's why you see this kind of growth. In Philippines, Vietnam, and Indonesia, wallets are reportedly the leading e-commerce mode of payments. In Philippines, you see the two top wallets are GCash and PayVaya. Those account for 85% and 65% of adults respectively as users. That is a very respectable acquisition rate. Even discounting wallets that are automatically created for the user, I would still say the penetration of wallets in Southeast Asia is an impressive amount, for the kind of proportion that we have of users that we have across the country, of smartphone users that we have across this region. It is actually pretty respectable. Yes. And what is the history of payments without Web3, i.e. What some people see as the future? I will also make a disclaimer that personally, I am definitely not a Web3 expert. I am actively learning, and it's very possible that many of you know more than me in this aspect. And if you don't, then there are many other talks during this FinTech week where you can get more insights, I'm sure. But for completion's sake, here I go. Web3 is the next generation of web development that will give the users control over the technology used instead of deferring it to the central government or MNCs or big tech. This is the decentralization that I spoke about earlier, swaying the power that institutions hold over the issuance and the value of fiat currency. Again, this is a multi-layered debate that I'm sure a more qualified person can school you on. So I won't elaborate on that. Next. Just a quick one look at the differences between Web3 and Web2 payments, basically DeFi and centralized payments. Individuals who are absolutely unbanked, which means no traceable source of funds, you will see them unlikely to fully participate in any Web2 economy. However, someone who is totally unbanked today can still actually participate in Web3, which is more forgiving and more accessible to the common person as a whole. Of course, this is also a very simplistic dichotomy because there is an intersect between the two, being Web 2.5, and some companies are effectively double dipping into both in preparation for Web 3. So what lies ahead? This is in my own personal view. The solution to the current Web 3 problems is likely to be Web 2.5 as we make the inevitable transition over to Web 3. My view is also that Web 3 may not be currently in its final form. It's arguable what that form will be, but once a sustainable infrastructure and philosophy is established, it will probably take over what we currently know as Web 2, because 3 will come after 2 inevitably, but when, in what form, that's questionable. From my experience, it's also probable that current infrastructure and financial regulations are at the current state unable to deliver what we want to see as peak Web3 or metaverse. Right, we still have that road ahead of us, and we all anticipate it together in the market, and of course, for students like yourself. We also see a split in demographics, whether it be age or socio-economic strata, in their view of Web3 as a whole. So I would say adoption today, or rather large-scale adoption today, is still rather shaky. Long term, I would say that we will leverage on the development of network architecture, combined with education of the masses and socializing Web3 use cases to our everyday habits. That's the textbook answer, but it's also the one that makes most sense to me. Yeah, now that we have ended the rather long history of payments, I would like to ask, what does it take to start a fintech company and run it successfully? Apart from the obvious answers, a solid business case, novel concept, and big customer base, there's also a very important component, which I would like to talk about today, is compliance. While this might sound like I'm lauding my own area of expertise and saying it's important, I am actually truly convinced that compliance remains as the backbone of a fintech company. Adaptation of an old saying, if you want to go fast, focus solely on your business idea. But if you want to go long, also think about compliance, or you are going to run into trouble one of these days. If a company requires a license to conduct its financial activities, it is a non-starter if that license is not in hand, and that is part of compliance. So the licensing for fintechs these days revolve around the PS Act, or what we know as the Payment Services Act. Although there are some that dabble in, for example, capital market services like CMS, or even InsurTech for Insurance Act. Mastery over that relevant act grants you effective licensing processes, strategy, and also eliminates the over-reliance on law firms and consultancies. It also, as a bonus, feels good to not respond to every query from investors or management with, I need to consult my lawyer. If you find yourself saying that a bit too often, then you have to worry about job security. So fintech and AML CFT, I would say, they come hand in hand. As a pseudo-banking function, there's always an expectation of the fintech that you will participate in the nation's anti-money laundering and countering the financing of terrorism efforts, right? The failure of which will result in either fines or fines, which will wipe out a large proportion of the company's profits, or even worse, jail time for the person. Corporate governance often plays a role in compliance as well. For example, your anti-bribery and corruption policies, do you have them? Board meeting frequency, and how often the board exercises its governance on these functions, all have to be given some thought. I guess the basic question really is, are you doing the right thing? And is what you are doing in line that is commensurate with your responsibilities and obligations? Of course, an increasing amount of scrutiny has also been placed on data privacy. Actually, pretty in the last few years, I think the last 5 years, there has been an increase in scrutiny with the setup of the Personal Data Privacy Commission and the PDPA as well. So there are two parts to data privacy. The regulatory arm, which focuses on establishing whether you're collecting proper consumer consent, reasonableness of disclosure, and of course the tech arm, which then focuses on information security, encryption standards of data in transit, data at rest, etc. So all of this basically means that there are demands for compliance, which will open up new careers, no matter which kind of discipline that you come from. If you come from audit, you can do, for example, licensing consultancy or IT audit. If you're doing analytics, you can do transaction monitoring or machine learning and calibration. And if you are a law graduate, you can do regulatory compliance. If you're from CS, which I think a lot of you are, you can also do tech data protection, which is very wide in its scale, whether you have business continuity, InfoSec policies, penetration tests. There's so much to do in this sector. So these areas are all opening up. The space is constantly shifting and worth exploring if you have the interest. And if you don't have the interest in compliance, here are the top 5 careers in fintech. I will add that I pulled these stats off the internet, but I'm also able to corroborate it with my own market experience. As employers, we are always looking, and I've seen my share of applicants for AMX as well as outside the market. These are some roles that I think you can pivot yourself towards as an undergrad, and what kind of skills you should have to apply for these roles. Of course, the best way, I believe, is to get a taste of all this. I think, for example, personality is quite subjective. So I can't say for sure which types of roles suit you or gives you a sense of satisfaction. So also take this with a pinch of salt. So let's talk about the more high-tech one, blockchain developers. The part on the left is arranged. The part on the left shows the duties of the job, and the right shows the skills that you preferably should have to secure this kind of job. Blockchain developers are more involved on the tech side of things, where your primary task is to establish the architecture where the blockchain will operate on. So for customer-facing platforms, you may be tasked with implementing the UI or ensuring that the blockchain is secure by observing security protocols for that blockchain. These roles are mostly complemented by hard skills, like such as cryptography, algorithms, research skills, but also on your willingness to develop and invest in this area, specifically for this area. Again, it is not like the job market is a casino, but there are certain specializations that require a bit more foresight than others. I think this one is probably one of them. For those of you who are a bit more socially inclined or are good writers, you can consider being a crowdfunding specialist. So what does this entail? In an industry that sometimes lives or dies on the level and consistency of the funding that your company has, crowdfunding is definitely a must. Even though the market is facing an enduring seed decline, it only ensures that the best crowdfunders come out on top in their Series A, B, C, and so on and so forth. Disclaimer, I haven't actually done any crowdfunding myself, but I understand that most of the skills in these areas are focused on marketing, running events, as well as business development. So basically drumming up hype on the project. If you join one of these Discord projects, you will understand what these community managers and crowdfunders do, right? So those with strong communication, verbal and written skills can also consider this as an area to expand in. While we all live in a world where ChatGPT exists, so anyone that specializes in copywriting should feel sufficiently threatened. If not now, then at least for the future. So on top of writing, also learn to diversify and develop some business skills from the leaders while you're at it. ChatGPT is an AI tool that helps anyone write based on a prompt that you feed it. If you don't already know, I'm assuming some of you have already tried using it. In fact, you never know, this entire piece could be written by OpenAI, but I digress. If you're lucky enough, you could be able to shadow the company's founders and help them prepare materials, perhaps even have the chance to sit in during the pitch meetings. I find that this does give you a good feel of what the market is like, and possibly also watch your bosses get pelted or grilled with sharp questions or opinions, and of course, see how they expertly handle these questions in that respect. For those of you who are statistical experts with specialization in actuarial science, a QA for fintech, I would think, is always in demand, whether it is a long-term investment risk or to make a quick analysis on a proposed ad hoc business decision. Analysts are always in demand. The result, in short, is to ensure that all the risk areas are visible and mapped out and keep exposure of the company low based on data. So those of you who took mathematics, actuarial science, statistics, and programming may find yourselves at home with this kind of scope. This does tend to be an extremely specialized field, and to be frank, I feel that less mature companies might not be at the stage to hire a full-time QA. But there are many roles that I see today that still function as a double hatting kind of arrangement, not to the point of specialization. Typically, it's a generalization, but the more specialized your skill set, the higher the chance that you will need to dual hat in an organization such as a startup. So maybe also BA or business analyst will be involved in this kind of sector as well. So it does bear reminding that not all startups have equal funding or priorities. So also be mentally prepared to diversify on. For those of you who want to gel your technical competence and soft skills together, perhaps UI UX is the way to go by going to product or app development. I find this market actually the most robust out of the five, as it has a place for candidates of varying disciplines. For example, undergrads with a background or major in psychology or behavioral science can leverage on their skills to design an app journey or help to conduct focus groups on your product's alpha or beta builds. Not exactly something I think they teach specifically during your FASS courses, so you have to intentionally gravitate towards this kind of industry in order to secure this as your first job. But I always think it's good to step outside your original comfort zone, especially if that is an inclination that you are starting to discover now. So tech, I think, is still a great place to be. I'll not really touch on the risk of the area of compliance and risk from the duties and scope standpoint, because I already talked about that. But I also speak briefly about those the fitting for this kind of careers. Some people tend to perform and enjoy the roles a bit more better if they are logical, process-driven, and meticulous, while others who find the work slightly monotonous if they require freshness on the daily. So the kind of skills and background, I think those who have legal skills definitely very well positioned to take up a risk and compliance job. Those who enjoy investigations, snooping around, and combining both data with customer behavior, all of these will find this a relatively good and fulfilling fit. Basically, all the very capable people who want to go and investigate, you will find some form of fulfillment here. Not that I'm very bakwa, but I do like to have tea every now and then, so it helps to scratch the itch in this respect. Next. Now, this is the portion of my talk that you may or may not enjoy, because it's a lot less technical and statistics driven, so it's very subjective. It's the part where I wax lyrical about what I think about the world of startups. Again, my own personal opinion doesn't really reflect what other people in my position might tell you. It also isn't reflective of my company's views. So just me to you all. How do we see businesses these days, right? You have people who are self-employed, working on the gig economy. You also have people who start up their own businesses. You have people who just take over their parents' businesses. And many others just choose to apply according to their specialty or what opportunities they have. And to be frank, there's no right or wrong way about it, right? They are all jobs, all legitimate businesses. If you want to really split the hairs, it's possible to see them in 3 buckets, a very simple way of looking at it. And of course, in no way accurately reflective of the actual state, because it's more of a spectrum. First, being an MNC, so you have big companies spanning across several continents, sometimes headquartered in Singapore, but some other times with other head offices in like New York or in Europe. Usual suspects would be, for example, Meta or Facebook, Microsoft, Salesforce, Amazon. These are all MNCs in tech. Number 2, then you have, in contrast, startups, which are generally smaller in scale, but more numerous. Although you have to take note that while there are diamonds in the rough, there are also rough in diamonds. So if you pick a startup, my advice is that you should be more discerning. If you already know that you are notoriously bad at making choices or very unlucky, then maybe think twice about the startup that you're applying for. Make sure that it's the right one, or ask for a second opinion. There's no sense being shy when it's concerning your future. And the third one would be the Iron Rice Bowl, which is Sing Wukong or civil service. So exposure to tech will be there, but at times you may have to learn some legacy infrastructures, which can be a turn-off to some starting out. And your runway to being an expert may be a bit longer than the rest. Of course, there's an exchange for sustainability in your career. But since we're talking about tech here, it's probably the startups that you're looking for. If you want my extremely unbiased opinion, it's definitely the startups that you're looking for to join, right? For its agilities and as well as the opportunities that it affords you. When you examine mature tech as a business, it tends to have slightly more layers that makes it costly for the business to pivot at times. And you'll eventually learn what you would normally learn in a startup, albeit on a longer trajectory. And that will also afford you exposure at a relatively lower rate if you join big tech. Again, these are broad strokes, so your mileage with big tech may vary depending on the role or the team that you join. Some people don't like the letters S, M, and E, which stands for small, medium enterprise. They associate this with a lack of funding, lack of professionalism with your boomer bosses, having to do a lot of extraneous work beyond your scope without being rewarded. And on top of that, also the uncertainty of the business outlook as well as your own career. But in reality, startups are a lot like SMEs. Technically, they are the same. So some SMEs have started branding themselves also as startups to get more eyeballs. But my view on this is, let's not fixate on the names or the terminology, but look at the DNA of the company. The DNA is what makes up the company, its mission, its core values, and more importantly, do they practice what they preach? If SMEs and startups are the same in scale, then the latter could probably be said to be a subset of the former in any case. In that case, what matters is the DNA of the company. Who's managing it? Who's leading it? What is the leadership style like? Do they respect and value their employees? These are all things that you should be thinking about when you talk about a company and not its sector or its specialization. There are organizations with very strong tech DNA, for example, which means they focus a lot on design, coding, philosophy. Their tech stack are above average, and that's what they leverage on to differentiate from the many different competitions that you see out there in the market. If you are into tech, learn to ask the questions that can bring out signs of that DNA, perhaps during your interview or with your recruiter. If the marketing people that you are speaking to can already display some form of understanding in tech jargon, then you get the general feeling that the tech DNA in the organization is quite strong. Of course, tech DNA is not the only archetype of tech companies out there. There are many different types of DNA that you will see. Some are hybrids. So there are a multitude of archetypes that you will encounter in your career journey. There's a lot to experience. And then from there, you can filter out which ones are likely or not likely to resonate with yourself when you work in the company, especially for your first job. I have seen my share of graduates who are burned out by a toxic startup or SME, and then they never ever want to touch startups again. That's a bit of a pity, and definitely, in my opinion, a waste, because one mismatch does not mean that there is no future in this model. After all, we should also be cognizant that big tech once took the form of a startup, right? The once small. For example, if you've seen the films like Social Network, which you have, right? You know that Facebook used to be small as well. So pick the right startup. How do you know? So next question is, how do you know if you're cut out for a startup or not? That is actually a trick question because you never truly know, right? You already have to see it for yourself. It's a cop-out. There's no course, at least in my time, that is focused purely on fintech or startups, because that would be too specific. But I think this, for example, this fintech week, that's a good start. Your participation in it's a good start, right? Events like these, actively sourcing for internships to leaner tech companies might be able to bring you closer to the world of startups and give you a bit more of an insight as to how startups work and what kind of DNA that you're looking for. You'll put you ahead of graduates that are just looking for any positions, that's for sure. You'll even be ahead of candidates looking for a mid-career switch if you start being active today. So, do yourself a favor and start today. Don't be dejected if you don't succeed at first with startups. It's a waste to give up, and I think you owe yourself that much to keep trying. I also often get this question, is it okay if I don't start in tech? Or how do I get into tech at this stage of my career? Or should I only hold out for tech jobs? Again, the answer is the same. It depends on each person's priority and goals. But if you were to ask me personally, I would say yes, it is absolutely okay if you don't start in tech. There is a degree of randomness and volatility in the job market that you are unable to control, right? Don't feel frustrated about that. You can't control your timing in the market or the timing that you enter the job market. If you graduate this year, then you find a job reasonably sometime within the year, unless you can rely on your parents' credit card, but we're just talking about normal people here. So I'll just share a bit of my own journey here, just in case you weren't already bored enough. I graduated I read law at the law faculty of this university and started my first career actually as a litigator. For those of you who don't know the difference, a litigator is a lawyer that spends most of their time at court, wagging their fingers at witnesses and arguing with opposing counsels and sending passive-aggressive follow-up emails. You would think, then I did think at that time, that I would spend a large portion of my time, of my life, shuttling through courtrooms and presenting evidence, and that is actually a far cry from tech. I wasn't even a corporate lawyer back then, so I didn't work with large tech firms for the IPOs, or with intellectual property firms for the registration of tech. No, I was an old school guy with an old school suit, and I thought if I worked hard enough, I would be a partner someday. But as fate would have it, I left the legal profession earlier than I thought I would, definitely before I was given partnership, and I got involved in the world of payments. Now, I cheated a bit because I was already somewhat into tech by then, but only as an interest. So payments, when I entered, was at a point in its development where tech and project methodology was becoming an increasing focus in the market. So the regulations were then amended, and they passed a new act to govern financial services, applying to most fintech firms looking to set up in Singapore. So in my view, that was a hard reset. Basically, all the old players didn't have the advantages anymore. It was great for me, but everybody was made to start from basics again. So timing is also important. It is out of your control, but it's important. If your time is not now, don't worry. I believe that your chance will come. But if you stop looking, then you won't know where to get off. So this is not about me telling you my career story, but telling you that skills that you acquire in your professional or academic journey can still land you a place in fintech, whether it's today or it's at a later time in your life. So focus more on finding a place that can help you develop these skills, and I believe you'll be fine. Good is the enemy of great. This is something I hear a lot, and I see it incessantly on LinkedIn that it's almost annoying to me now. The meaning of this phrase is to suggest that one should never settle for mediocrity. While in its original form, I believe that the intentions were pure and saying that we should always strive for better and avoid complacency. But oftentimes this has been bastardized to imply that your work is never good enough, your career is never successful enough, and that you should hustle 24/7. For those of you who find yourself likely to suffer from imposter syndrome, phrases like that can knock you down and cause a lot of self-doubt. Instead of focusing if your good is in relativity the enemy of someone else's great, focus on seeing if you got a little better than the day before, instead of trying to skyrocket on day one and burn out. Pace yourself. Considering what I said earlier, careers in fintech might be the beginning, it might be the middle, it could also be the end for some of your journeys. So this is all really relative. If you're lost as a fresh grad, don't panic. My advice is to see that there's more to career than the sector that you work in. Tech that doesn't exist for your specialization today does not mean that it will not emerge tomorrow. When I entered the legal industry, there was no concept of legal tech, for example, at least not in the form that it is today. In the past 5 years, legal tech has exploded in popularity and become a key player in the legal industry. Legal tech refers to the use of technology to assist with legal tasks and processes such as legal research, document management, and court case management. One of the major developments in legal tech over the past 5 years has been the growth of artificial intelligence and machine learning in the legal field. AI and machine learning have been used to automate various legal tasks, such as contract review and due diligence. These technologies have the potential to significantly reduce the time and cost associated with certain legal processes, and then making them more accessible to a wider range of clients. Perhaps you couldn't tell, but the last 2 paragraphs were entirely generated by ChatGPT, an AI/ML tool that has been plaguing university educators as of late. So you see, the way we see and do things is always changing. The tech that's available to you today is something that didn't exist before. And tech that's not available to you today can also exist in the future. So it doesn't really matter which phase of your career that you're in, whether you are still studying or you're still applying for your first job, or you're midway through your career, because the industry can get disrupted just as easily as that. So my advice is to invest in yourself, not in your job. Acquire skills that you think can future-proof your career. Be attentive to see what works and what doesn't work. Learn from your failures, but also learn from other people's failures, because that's free tuition. Spend time acquiring skill sets that you believe will help you out in your dream job, because timing, right? Like I said, you won't know when your next opportunity in tech will come. And if you're not prepared, then you can't make it. But if you're prepared, you're already halfway there. Be discerning and choose your job as much as it chooses you. I have conducted many interviews, and one thing I do notice is that interviewees don't interview their interviewers enough. Now, I am very well aware of the power dynamic that exists between the two, and I'll be a fool to insist that there is parity in power between both sides. But sometimes we just want to see whether you put in enough thought to the application, whether you see a future with the company. And if you did, then you would ask questions about our plans, our business trajectory, the growth of your own role, for example. Trust me, I think it would be a refreshing breeze if you give your interviewers the chance to think and share as well. I'm very close to the end. Before I end off this talk, time for me to micro a bit. In case anybody is interested, AMX is also hiring for a channel account manager. I'll leave this on for a while so that you can read the general description. From what I've inquired, this is a fresh graduate role, so I think it could be suitable for some of you who want to break into the fintech sector. Otherwise, we also, we always have some internship positions open, perhaps at the start of our FY, which is April this year, for different functions. This is not exhaustive. We serve quite a lot of functions here in Singapore. Feel free to reach out to me, or, Alicia, if this interests the FinTech Society, you can let me know where they take it from here, right? Lastly, I'd like to thank everyone for joining me in this talk. Thank you for your time, and I hope you took something back from this. You can feel free to, connect with me anytime. Do you have any questions? Not proud. But that's fine. I mean, even if you could always ask me offline, that's fine. It's been my honor giving the talk. Thank you. Cheers. You gotta do this outro.
All right, and with that, we've come to the end of the workshop for today. So thank you so much once again to Yi Liang for coming down to present to us on his expertise in compliance. There are questions actually, but there's one question, I think. Oh, okay. Yeah, that one just
I don't know if you want to handle it or not.
do you want to?
Okay, you just read the question out first. I'm going to talk about it. Is the person still here?
All right, so we have a question in the Zoom comment section. So hi Liang, thanks for the insightful workshop. You mentioned just now that when you got into the space during the last reset, when fintech laws got stricter. So just wondering, what do you foresee the next great reset to be?
Okay, interesting point. I think nobody really is clairvoyant here, so you can't really tell when they're going to reset, nor do I think you should be holding out for that reset, because I wasn't holding out for that reset. If I was, then I would not have actually entered the job market in the first place, right? I did what I could, I learned the skills that I learned, and then when the time came to pivot, I pivoted. So, it's not about predicting when the next reset will be. I think, for me at least, that is a bit too volatile and not something that I would really recommend. If you're really asking me to project, I suppose the next one would be Web3, DPTs, crypto, and all that. I think it is not at the most mature form yet, and both the product as well as the regulators are slowly evolving. Whether this will culminate in a full hard reset, that is really anybody's guess. But again, get your feet wet first. My advice is to don't wait for a reset. Don't try to time it. As long as you are in the market, as long as you are in the job market and acquiring good enough skills, skills that are meaningful to yourself, as well as good in the market, I think you will find a way. It may seem very very hazy or misty at this point in time when it comes to searching for a job. And, you may want something, a low-hanging fruit, like a hard reset. But that really doesn't come to anyone. And I really think that you shouldn't hold out for it. Yep.
All right, and so with that, we've come to the end of today's workshop.